But the sector that's been buzzing of late has been metals, and it's been twinkling of late. Now, NMDC, they have gone ahead and increased prices by 400 rupees per ton. To help us out with how production is shaping up, how is demand on ground, and what about pricing, we're joined by Mr. Amitava Mukherjee, the CMD at the company. Hi, Mr. Mukherjee. Good morning, and thanks a lot for joining in here on CNBC-TV18. Well, let's talk about pricing first up. You've increased prices by around 400 rupees, but that's after you reduced prices by 1,100 rupees per ton. What's your take in terms of difference of NMDC's pricing with competitors, whether it's with Odisha miners or with regard to imports? And do you believe there's a case to increase prices even further from here on?
Well, after almost 3 months, we've been able to take a price increase. So that's the good news. That's the light at the end of the tunnel. I hope so. Of course, with respect to imports, we are still in the East Coast at 65% FE. We are still lower by around 35%. And in the West Coast, it is lower by around 27-28%. As compared to the other domestic miners, well, you will see that on a landed cost basis, we are at par. We are reasonably at par. We have taken this price increase as most of the steel prices, whether it is rebars, etc., pellets or billets, they've gone up. Except HRC, it has not moved in the last 2-3 weeks. But the other prices were showing signs of northward movement. So we thought that this is a correct time to take a price increase. We hope that if this trend continues, and the international prices have also gone up by around $10 from 96 or 98 to about $108. So if this trend continues, hopefully, let's see, next month we are keeping our fingers crossed, but hoping for the best.
Right. So you expect, the prices to increase next month as well if the international trend continues. Would you be able to give us a sense of the quantum of that price increase that you may take next month, all things being constant right now?
It will be very difficult to speculate on what we'll do next month. Let's see how the market thinks.
What we're trying to get at is that, do you have a rule of thumb that this is what NMDC prices would trade at a discount to versus the global? You said that you're about 55 to 65% lower. Would you like to narrow that gap?
No, it's not 55% lower. It's 35% lower in the West Coast. But then
yes,
it is neutralized by the export duty. So it has always been never at par with the international prices. Indian ore prices have always traded at around 25 to 30, 35, sometimes even 40% lower than the international prices. That's been the trend throughout. So I don't think there is a case for import price parity of our ore. It has never been the case, and I don't think it's going to be there in the future as well.
Let's talk about your operational update then. We have the numbers for the first 6 months of the year, and they're a little bit lower because of that, there was that worker strike, then there were some logistical issues as well. Earlier, you were talking about production number of around 50 million tons. That's going to be a tall ask, and most on the street believe it's not possible. What's the fresh guidance you can give us on sales as well as production numbers for this fiscal, FY25, since there's a degrowth so far?
So if you see year-on-year basis for the H1, we are about 2 million short than last year. We'll make this good. There's absolutely no doubts about that, and we'll exceed that. 50, yes, we'll still try to be 50, but we should be comfortably at around 48, should be comfortable. And if things go well, then we can do 50 million tons. Remember, last year, after January, almost there was no production in Kumaraswamy because we had reached the MPAP level of around 7 million ton. This year, we have around 8.63 million ton for MPAP at Kumaraswamy. So that in the next 2 months will obviously, in the last 2 months of the year, will obviously come. So I think around 48 plus should be the production guidance. Dispatch would be 50. Dispatch, I don't think there is an issue. Dispatch should be around 50 million ton. We are only 1 million short as compared to last year, if you see. And we have had a few new sidings at Bailadila. So I think our capacity for dispatches have increased, and we have a new rapid wagon loading system in Kirandul as well.
So 48 million tons production and dispatches at 50 million tons. You still believe you can do that, correct?
Yeah, I think that should be.
And you briefly mentioned Kumaraswamy, you have got the clearance to do around 8.6 million tons, if I heard that correctly. For the company
Yes.
on the whole, what clearance do you have to do? I think the last time, if I'm not mistaken, it was around 53 million tons EC clearance.
It is around, last time we talked, it was around 51 million tons. Now it is
Okay.
53.8 million tons.
And how you see this go up from here? By when?
Yeah, well, I think progressively by this year end, around February, March, we should see another 4 to 5 million tons of EC capacity coming in, because some of our mines are, as you know, 5-star mines. So we can increase our EC by 20%. We have applied for that. They are at various stages of approval. We hope that by the last quarter, it could be January, it could be February, but I think that the last quarter, those approvals should be available.
All right, so 57, 58 by the end of this year. You know, you had this target of 67 million tons in terms of production by FY26 and the ambitious one of 100 million tons by FY30. Those targets are still on, right?
Oh yes, definitely on. In fact, we are rather serious about it. We have catalogued the investment that is required. As per our latest estimate, it's going to be around 70 to 75,000 crores of investment that will be required in the 4 to 5 months. So we have done the first thing of cataloging it. We are the various projects are under at various levels of approval. Some are at the board level approval, some are lower down, but we are approving various projects. So I hope that by the end of FY29 or 30, we should have completed execution of these projects as well. So we are very confident that 100 million ton by the end of the decade.
You know, these numbers that you're talking about, 70 to 75,000 crores in terms of capex. Over how long are you looking to deploy that, and where do you get this money from?
5 years. We would expect that to be completed in the next 5 years. Mostly it will be internal accrual. I think we have cash reserves of around 14,000 crores right now, even if we account for dividend and the future cash flows. I think almost all of it can be financed through internal accrual.
Okay, all right. You know, Mr. Mukherjee, you don't talk to us too often, so we'll have to ask you on NMDC Steel as well. You know, and we're going to talk about the other company. What is the current volumes you're doing? You know, if you want to give it to us on a monthly basis, what is it looking like? By the end of this year, what is the total volumes that you'll do from NMDC Steel? And when does it break even?
Your last question first. It should break even by the end of this quarter on a monthly basis at an operational level. So we should be, all our problems we have been able to solve, except one, which was dispatches. Now, dispatches, I just explained it to you a little bit. We had a 5-kilometer stretch which was non-electrified, and as a result, the rake placement and drawal was taking a huge amount of time. Now that has been electrified, it is being tested, and I think it should be operational in the next 7 to 8 days. So once we are done, we have done production of around 130,000 per month of HRC in the month of August. And we just need 150,000 to break even. Not really much. So we are almost there. Of course, September we had to throttle down our production, essentially because we could not make the dispatches and our stockyards were full. And because our stockyard was full. But going forward from October onwards, once we have solved the problem of dispatches, production is not going to be a problem. 160,000, 170,000 per month, yes. And by the end of this quarter, on a monthly basis at operational level, we expect to break even.
So you'll break even in Q3 of this fiscal, correct?
Yeah, Q3 should be a break even, but of course, because we have lost money on Q1 and possibly will lose on Q2, and an annual break even, it might be beyond March, but on a quarterly basis, yes, Q3 should be a break even.
So for the year, you'll do 1.5 million tons? Approximately?
Yes, we wanted to do around 2.2 million ton. So the last 6 months we should be doing about 1 million ton, and we have done around 0.6 already. So we should do around 1.6 or 1.7 million ton by the end of the fiscal.
Got it. And is this asset on the block? Earlier, the government was talking about, DIPAM was saying that they want to sell it. Then after that, there was an election in the middle, and things went away. In fact, the steel producers, they asked me, Nigel, is there asset on the block? We have already, submitted our EOI. Is it on the block?
Well, I have no comments to make on that.
You have no comments, or do you?
No, I don't. I'm not privy to any further information on that.
You're not privy to any further information, but it could be on the block, is what you're saying.
I couldn't, but you can't answer on my behalf. I don't think I've made that answer. No, I have
All
no
right. No, because there's constantly news, so we just thought that you'd be best placed to understand this.
No, I'm not the best place. I can assure you, I'm not the best placed person on that question.
Okay. All right. So you will keep going as if the asset is not on block.
Yeah. I'm running a steel plant. I'll make it profitable. That's my job. And I'm going to make it profitable in 3 to 4 months' time.
Okay. All right, Mr. Mukherjee, appreciate you joining in, giving us all those guidelines with NMDC Limited as well as NMDC Steel. Look forward to having a chat with you at the end of Q2 numbers.